Significant development at hand, red spec. Once again shown on a logarithmic scale, this chart displays the Sockler floor price. Also take note that the color axis is now changing. The phase is more important than the number of months till the next halving. Therefore, it can be the blue accumulation phase, the distribution phase, the bear market, or the bull market, all of which we have experienced. At this very moment, a phase switch is changing. We have now moved past the accumulating phase. Consistent expansion, hassle-free purchasing, ETC are gone. No, let's ride the bull market. Consequently, there will be a lot of minus 30% falls, a lot of price pumps, and phase melting fear of missing out. What do I mean by that? Many people wonder. Take the 2017 Ultima high as an example. It's more common than the ones in 2020 and 2021. During that one, there were 5 or 6 dives of less than 30%, followed by large pumps. Bull markets may be terrifying and mind-numbing at times, especially for those who have never been through one before. Analysis conducted by PlanB indicates that the cryptocurrency sector is about to undergo a significant upheaval. The intriguing transition from the accumulation period to a full-fledged bull market is introduced by this investment in the crypto realm. A period of severe fear of missing out, FOMO, will begin with this shift, ushering in a roller coaster of prices similar to the 2017 bull run with unavoidable 30% drops. This next period is going to be a mix of exciting and challenging for everyone in the crypto sector, from long-time players to newbies. As we approach the beginning of this bull market, it is more important than ever to understand the fundamental dynamics and be ready for the inevitable turbulence. To successfully traverse the crypto landscape during this market transition, one must be alert to the possibility of both highs and lows. There are a lot of things happening here. Obviously, the story is ETF right now. A 5% increase in Bitcoin's price was driven by a $500 million investment into the ETFs in a single day. Higher money is going to pour into the ETFs, which means prices will go up even higher. And throughout the remainder of 2025, sovereign money and adoption by nation-states are possibilities. After this, who can say? People will be taken aback. You won't believe it. All I'm going to do, and all you should do, is take it easy, relish the journey, and most importantly, don't freak out when you see that first 30% drop. For many, this will be the defining moment. We have entered a bear market. Now we will return to zero. The market is still bullish, so it's simply a high volatility, double-digit decline. That concludes it. Until the yellow debt arrives, we will likely spend the next 6 months, a year, or even 2.5 years watching red dots. That, however, will not be an issue for us in the near future. The realized price is the average of all Bitcoin's prices, thus the question becomes, where are all the Bitcoins? 19 million Bitcoins directly stored on the blockchain. Where can I purchase them? For how much on average, and at what price point? The current price is $25,000, with a realized price of $37,000 after 2 years. Additionally, $49,000 is the 5-month realized price, which is also called the short-term hodler price. However, every one of them is on the up though. All of them are climbing, and Bitcoin is more important than any realized or cost price. That, then, is the hallmark of a rising market, a win-win situation for all. Also, there are no assurances, as with the 200-week moving average. Personally, I don't think we'll ever go below that short-term hodler 5-month realized price while the market is bullish. This is where it is. In the end, we shall observe all of these drops of 30%. I should clarify that we will not close the books at the end of the month if we fall below the light blue line, which represents the 5-month realized price of $49,000. It seems like we've hit rock bottom at $49,000. The following graph. Finished product. In February, they are the Bitcoins that are sold. They made a profit of 63% on all those sales. Funny thing is, we were just talking about the possibility of a 40% orange realized return after the halving last month in the video. An hour prior to the halves, a red dot indicates that the sellers made over 60% profit. Additionally, that indicates a strong market trend. March saw Bitcoin close at 61,000. At the end of the month, on October 21st, it reached an all-time high, so it's somewhat below that. Unfortunately, that drop occurred in the very last trading hours. Anyway, in terms of dollars, we experienced the biggest monthly rise of about $20,000 in a single month. The most critical thing is that it is now trading above or on the flow to stock model line. Now that stock to flow ratios are back up, I think it's time to break this model to the upside. You know, it's kind of funny. When prices were low in 2022, the stock to flow model was widely criticized for being negative. the model is invalid, they claimed it's broken. In 2019 and 2020, we experienced that same thing. However, each time the price has fallen below the model, it has subsequently risen beyond it and on occasion even surpassed it. Therefore, I am praying for that. After the halving, I anticipate that we will break the stock-to-flow model on the upside. 2 more blue dots, one in March and one in April, strip the remaining dots down to the final 2 before the halving. The color axis might be highlighted at this stage as well. In this chart, the halving won't happen for months. And it may be anything I use RSI and everything else. However, the graphic shows that the halving won't happen for months. The remaining 2 months will be marked by 2 additional red dots, followed by 2 more blue dots, until the color changes to red. Just like in the 2012, 2016, and 2020 halving examples shown below. In April, we shall divide in half. Well, then what comes next? Yes, I believe that looking at the past shows that the price increased after the halving, albeit with a slight lag. Even in 2024, I anticipate that. So prices will go up and the market will be bullish, but I don't think 2024 will be the peak. In 2025, I anticipate the peak. It should be noted that this graphic uses a log scale. When you go from $1 to $10, $100, and $1,000 in dollars, the prices increase by a factor of 10. Many people mistakenly assume that a value is linear in the middle if it appears here on the chart. This leads them to believe that its value is $700 or more. The correct amount is $500,000. That is evident right here. I also included this tiny grid for that reason. Here we have $100,000, $200,000, $300,000, and $400,000. 00. The amount is $500,000. Since it is a logarithmic scale, the spacing is not uniform. And finally, there was a small dip right before the halving in the previous cycle. Naturally, that was the COVID plunge in March 2020, a black swan it was. I really doubt that will happen again. I still don't think it will happen. But anything is possible. Obviously, this poor beginning is the reason why last cycle was quite low. However, the Luna and FTX exchange disasters also contributed to the China ban, which eliminated half of the mining capacity. Consequently, our previous cycle was quite poor. As a result, the outcome is highly intriguing. I anticipate that the following cycle will be more typical and perhaps even higher to compensate for current comparatively low one.